Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Friday, August 21st. I'm Phil Streible, Chief Market Strategist at Blue Line Futures Metals Minute, episode 728. And looking at the markets here, the risk events ahead. Precious metals are exploding higher here in U.S. equity futures. They are rebounding after selling off yesterday. Now, 3 weeks into August, what I look at here, and I'll look on the almost every Friday, is I look at the performance leaders on the month, because you have Bitcoin up 23%, just blasting off out of nowhere. Silver, second best performing commodity, up 19%. So let's make silver great again here. Let's get that thing back up to triple digits. I had a lot more fun then. So sugar up about 18%, platinum up 13%, gold up 19%, cotton up 8%, canola up 7%, bean oil up 5%. This is all on the month. So one of the things that you want to do is you want to look at these performance leaders at least on a weekly basis, on a monthly basis, and just see, is your portfolio holding any of these? Because over the week, I've discussed a lot of these outside markets here. Things like sugar, things like cotton, canola, and bean oil, which have all exploded higher. And that's why it's important oftentimes to have a very diversified portfolio instead of that concentration risk. Now, the thing about silver looks great here, and we're making silver great again by making some leaps and bounds here overnight, hitting through some of the key moving averages, some of the key technical levels here. But that volatility is starting to expand on that market. So you really want to, do a check-in here on your position sizing. Now, all this performance has been at the heels of the dollar index, which continues to slide down about 1.2%, and the volatility index. So if you're waiting for a crash here, down 13% on the month. So let's check in on the price action here in the precious metals. Starting off with the gold market, up $69 here at $46.40, and looking at not stopping here on this session. So the chart angle on many of these markets here in the overnight session is like a 45-degree angle. I actually woke up at about 3:15 in the morning and couldn't go back to sleep because I was so excited by this price action here. So looking at the silver market, up $1.33, $69.40, hitting some key moving averages there. The gold and silver, the 14-day average true range, this is where I talk about the volatility here continuing to expand. So $107 a day, silver at $2.79 a day. Now, back at peak hysteria, December, January, February, that silver volatility and average true range was about $10.50. So it is entirely possible that we get a movement, up into the 70s, $72 before profit taking takes place here. Some of the short sellers come in, some of the hedgers into the market. I'm seeing some hedging activity out there come into the market here, and they start to short this market, and it breaks back down to $67. I'm not saying that's going to happen here. I'm just saying be aware that volatility is expanding in these markets here. Now, December copper having an explosive move overnight, up about 1.8%. Many clients were adding to positions here over the past 2-3 trading sessions, as that was one of the metals that was left out. Now, that metal is not entirely impacted by some of the treasury action that we saw out of Scott Bassett. We're not seeing that move from a monetarily aspect where you get yields changing and you get that dynamic into the copper market. But copper and aluminum were really left out of the party over the last couple trading sessions, and now we're starting to see a bit of a snapback here, specifically in copper, not so much in aluminum. Now, if you look at the October platinum, that's one that a lot of clients were participated in, and they were participating using short dated options and call spreads. I saw a lot of those getting taken off in the overnight session here, hitting some of those resting targets. And this is where the benefit of having a futures contract is that if you're on the ETF side or you're on the miner side, you've got to wait for that market to open. There's a lot of things that happen between now and the open, that 8:30 cash open, or wherever you're at the cash open on that could happen. That announcement that got this market driving higher was something that occurred here in these pre-market hours. And what's not to say that Scott Bassett doesn't come out and say, hey, we've concluded what we're doing here in the treasury market, and futures reprice and they set back here significantly. So that's why it's important to have a futures account in conjunction with your physical gold holdings and silver holdings, in conjunction with your metals and mining portfolios here with ETFs and those miners. Now, if you go into that October platinum again, breaching through $1,900 an ounce, settling back up about $50 on the session. So we want to check in on the retail positioning here. So the exchange traded funds, now this was something that we talked about, the rotation that's been taking place amongst these various asset classes here. So the exchange traded funds, they added 583,000 troy ounces of gold, biggest one-day increase since September 19th. Now remember, September 19th of 2025, we were trading right around 36.50. That's a big level. A lot of people were looking when this declined and we were selling off here, breaching that 4,000 mark. That was the area they were calling for, about 36.50. You go back, that was an area of resistance. We get the biggest one-day movement here since back then on the ETF flows. That was the breakout that started this rally up over 5,000. So now we're getting that type of rotation and that type of buying. And what did it come at the expense of? Well, yesterday the ETFs cut 2 million ounces of silver. That's the rotation that's taken place. They're really driving here, looking at the charts going, okay, which one looks like it has the likelier outcome or probability to hit some key levels, and that's where this rotation back and forth is taking place. Now, Platinum Holdings, they did increase for the 8th straight day, and the gold-silver ratio ticks down to 66-1, and that shows you the outperformance in that silver market because of the fact you've got silver up 2% and you only got gold up 1.5%. Now, the key levels on the gold market I'm watching, the 200-day moving average, really the whole story, and I'm not a moving average person. I only bring these in because of the fact that I get a lot of people asking about them and things like that. I use more of the tactical ranges. I look at the chart patterns and things and the expected probabilities of different setups occurring here through different dynamics within technical analysis. So if we can hold this level here and really build on it, this is where it brings in that 4,900 to 5,000 becomes the next levels to watch. Today's pivot I'm watching is 45.06. The support level really you don't want to see is that Wednesday, August 19th, the lows here. That's where the Treasury Department announced that repurchase agreement day here at 43.78. It sounds like wide ranges, but the reality is that average true range expands, and guess what? Those areas of support and resistance, they expand as well. Now, the outside markets, and this is one you got to throw up on your chart, just look at the US dollar extending its decline here, down 29 at 98.52. WTI crude oil, and this one's been a little bit silent. I haven't heard a lot of action here specifically surrounding things with Iran. That seems to have just been swept under the rug here for the moment, but oil prices have been quietly rising. You do have October crude oil sitting at about $87. That's quite elevated here, and it's rising again. So this week, a lot of clients were going to the December contract. They were doing things like the 85.90 call spread. Now, these aren't recommendations out to the public. These are observations that I'm seeing here, and some of the things that I coordinate with the clients. I'm putting these positions on here and then monitoring on a daily basis here, looking at some key insights on them here, running analysis on these different trades. A lot of these clients here have had positions in sugar this week, in bean oil, in the cotton market, and you look at the performance leaders, those are the ones that have been taking some of the ride here higher. Now you look at the equity markets here, the Dow Jones Industrial Average up 178, the S&P 500 up 25 at 76.87, the Russell 2000 snapping back nicely up 1890 at 30.18, and the NASDAQ here up 178 at 29,478. Since this Treasury auction announcement here, or repurchase, we haven't seen much action on the U.S. equities. They initially blasted off and then they pulled back. But I did see a lot of clients picking up S&P 500 in the close yesterday, picking up the Russell, the NASDAQ, and things like that because we were extended here a bit on the downside, looking for a snapback recovery. Now, today on the docket here, we'll have the PMI data, and we look at UK services PMI coming in a little bit hotter than expected here over in the UK. So we'll want to see if that has any kind of correlation to what happens in the US. You check it on the interest rate expectations using the CME's Fed Watch tool. The odds of a September rate hike sit at 34%. Traders are going to be watching next week that Jackson Hole on August 29th here for some more clues. You got 2-year Treasury yields holding steady at 4.18. 10-year yields here consolidating at 4.68. The yield curve kind of ticking back up here since yesterday, sitting at about 50 basis points. And you go over to European stocks here, they advance here with stronger than expected manufacturing activity data. And then you look at the Asian stocks, they rose with the MSCI Asia Pacific Index jumping about 1%. So this weekend here, I'll be writing the Navigating the Week Ahead. We'll outline some of these different strategies. I'll highlight a couple markets on my radar over the last week here. In the last one that I wrote, I did highlight the sugar market, bean oil, cotton, things like that. And we do analysis and breakdown on the gold market, the silver market, the S&P 500, crude oil futures here, and we'll bring in some other ones that we're monitoring, like the dollar index. These are the cross-asset pictures that really drive these commodity markets, inflation, the expectations of Fed policy here. So it's a lot of these things where if you get the insights on what's going on in the commodities markets, oftentimes you can get a great insight on where the economy is going, the global economy, and you can position for that in advance. So guys, got any questions? You want to open up a futures trading account? Takes about 5 minutes. Send an email, info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss, may not be suitable to all investors. This White Sox got me so excited. I'm already got my jersey on here this morning, so I'm ready to rock and roll here and see if they can bring a couple wins home. They struggled against the Cubs. They lost against the Braves yesterday. So let's see if that the turnaround here and the record tends to prove itself here, and we get hot here as we come into the tail end of the season. So you guys have a great weekend. Good luck, good trading. Get after it.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.